OK, we are just moments away now. We are standing by to find out the Reserve Bank's latest interest rate decision. Business editor Ross Greenwood is with me in studio. Ross, no change expected today.
Yeah, it's exactly right. So the Reserve Bank cut interest rates last month by that 0.25%, took rates down to 4.1%. It was really almost expected to be the time that they would really take themselves out of the election campaign. So many times you've actually seen situations where central banks have moved rates during election campaigns, but in many cases, Kenny, it's actually seen that it's almost likely that there's going to be a rate cut as soon as May, as soon as the election's gone past. And in fact, it could be the first of maybe even up to 3 more rate cuts this year, according to what the money markets are saying right now. So we're just waiting for that number to come through. Of course, we've seen inflation numbers come through. Inflation is coming down in Australia, but not yet into its preferred target band for underlying inflation, even though headline inflation is there. And certainly the Reuters poll at the moment for economists is basically saying that this is going to come through. So this decision will be coming through relatively soon. 4.1%. There it is, just dropped right now. So as expected, it is on hold. We'll get some of the reasons as to why very, very shortly, but this will not be a surprise in any way, shape or form to the money markets.
Yeah, so this is the first time that the RBA's new Monetary Policy Board has met and made a rates call. Do you think that they would have interpreted things differently this time around?
Look, this is a quite historic moment because remember Jim Chalmers reformed the way in which the Reserve Bank works. So again, you can see the long-term trend of interest rates. They've not been really as sharp as they have been in other countries. But the reason why was so that the Reserve Bank would not just target inflation in Australia, but also employment. The unemployment rate in Australia, sitting at 4.1%, is relatively low in historic terms, but effectively what they're saying is they want to lock in those jobs. And so that's pretty much what's taking place here today. So just going through some of the statement and just having a look at what they have to say, effectively, again, normal sort of thing, resolute in their determination to sustainably return inflation to target and do what will be necessary. That was in the comments last time. They're saying right now that the board's assessment is that monetary policy is restrictive. So in other words, it's actually high enough to be able to squeeze the economy. And we can see that because economic growth is fairly weak. The continued decline in underlying inflation is welcome, but there are risks on both sides and the board is cautious about the outlook. So again, this might change some of the rhetoric and maybe even the markets. And we'll see that very, very shortly because by saying that, they're not saying it is a done deal that those 3 interest rate cuts that I've had. Now, look at this. Here's the money markets. So look at the bond yield here on the right-hand side. It's suddenly jumped very sharply, the 3-year bond yield. Now, that means that they're interpreting that maybe you can take 3 rate cuts off the table. Let's have a look at this. Look at the Australian dollar. Suddenly jumped. Higher interest rates equals a higher dollar. Many expected the Australian dollar to go down to the 50s. All of a sudden, as soon as this has happened, it suddenly jumped. Now, the ASX, you'd imagine, was a little higher, now starting to come off after that decision. So the interpretation of what the Reserve Bank has just released is do not take interest rate cuts for granted at this stage. There is more work to be done to bring inflation back into the target band. The other interesting aspect of this is that the next inflation number, quarterly inflation number that they rely on, comes in on April the 30th. So they actually get that quarterly inflation number before the next rates decision.
Interesting.
That will be the key one. That will be to determine it. But you can see already in the seconds since we've been talking that money markets have certainly changed as a result of that decision by the Reserve Bank today to keep the rates on hold.